Hello and welcome. Yesterday in the European session, the euro suffered heavy losses against the US dollar, coming under pressure from downbeat data from the euro area. Business activity across the region performed worse than expected. Most of the purchasing managers' indices approached the 50 mark, separating growth from contraction, which indicated a slowdown in economic growth. The British pound also reacted negatively to British business activity, although statistics were not so gloomy. In general, both the euro-dollar and pound-dollar pairs got stuck in a sideways range. Now, euro buyers need to regain control of the area above 1.0550, while pound buyers need to protect the level of 1.2241. Today's macroeconomic calendar includes data on UK retail sales. Economists expected a decline of 0.7%. Companies in Germany are set to release their business outlook and their assessment of the current situation. Besides, Germany's IFO Economic Research Institute will report its business climate index. The indicators are expected to remain largely unchanged, which may support the European currency and its efforts to rise to weekly highs in the first half of the day. As for statistics from the United States, today's calendar is bereft of any important releases except for the University of Michigan's Consumer Sentiment Index and new home sales. Economists predict the new home sales will decline slightly. However, these will hardly weigh on the greenback. Thus, the quotes are likely to remain range-bound. Furthermore, FOMC member James Bullard is set to speak today, but I think he will not say anything new. Thus, his speech is unlikely to have a severe impact on the market dynamics. Now, let's take a look at hourly chart and consider the euro-dollar pair from a technical point of view. Just like yesterday, it's worth focusing on the level of 1.0549. A false breakout at this mark will create a sell signal. In this case, bears will make an effort to break below 1.0486, the lower boundary of the sideways range. If the price fixes below this level and tested from the bottom up, it will be possible to open additional short positions, counting on a slide to 1.0438 and 1.0388. However, I think that such a steep drop in the value of the European currency is unlikely. If the price forms a false breakout at 1.0486 or consolidates above 1.0549, traders will be able to go long. Thus, the euro will return to 1.0603, the upper boundary of the channel. At this level, I recommend going short amid a false breakout. Short positions on the rebound can be considered at 1.0640 or 1.0663, with a view to catching an intraday correction of 25-30 pips. Speaking of the British pound, the price has already bounced off the middle line of the sideways range and it's currently heading for 1.2317. The most likely scenario suggests a false breakout at 1.2241 amid upbeat data on UK retail sales. If the price raises about 1.2317 and tested from the top down, the British pound will have a chance of surging to 1.2400. At this level, it will be a wise decision to open short positions on a rebound, counting on an intraday correction of 30-35 pips. If statistics turn out to be downbeat, a false breakout at 1.2317 or price fixation below 1.2241 will create a sell signal. In this case, the pound-dollar pair is expected to return to 1.2171, the lower boundary of the channel. At this level, long positions can be considered only in the event of a false breakout. If bulls trading activity at 1.2171 is subdued, the pound sterling may face a major sell-off, plunging to 1.2102 and 1.2030. At the level of 1.2030, it will be possible to go long on a rebound. Alternatively, one may go long amid a false breakout at 1.2102 with a view to catching an intraday correction of 25-30 pips. Good luck, have a nice weekend.